We can't say it's been surprising to see the attempts to rally the equity markets in early 2019, with investors trying to squeeze out as much as they can from the Fed's latest dovish, more cautious adjustment to the monetary policy outlook. And yet, we believe we've finally pushed into that overdue point in the cycle where dips will no longer result in those record highs we had seen post-2008 crisis all the way up into the latter half of 2018, with the market now more inclined to be rallying into lower tops for fresh declines. Over the past week, there have been many headlines across the wires talking downward revisions to growth across many of the major economies around the world, and we don't believe it to be a coincidence, with monetary policy accommodation and government stimulus tools exhausted after artificially propping sentiment for so many years. We also haven't been surprised seeing those ongoing attempts to rally the dollar in the current backdrop, though here too we think the market will need to be careful about expectations for any meaningful upside in the buck from current levels. The U.S. administration remains committed to pushing forward with a soft dollar trade policy that it has yet to implement that should detract demand for the buck in flight to safety as sentiment deteriorates. The primary beneficiaries of this alternative flow are likely to be the other major currencies, though there will be room for other currencies to find demand on this theme as well. The pound has done a good job recovering from Thursday's setbacks which were much less a function of any downbeat guidance from the BOE and more about jitters around the fate of Brexit. But with the global outlook increasingly vulnerable, it should only serve as an added reminder that no-deal Brexit is not an outcome that would be a good outcome for any side, something that should produce a result that ultimately avoids this tail risk event. There were some optimistic reports to this end on Thursday, and this helped to prop the pound off the lows of the day, setting up a bullish reversal into the close. As a reminder, China was out this week for the Lunar New Year holidays and will be returning to the market next week. As far as the Friday calendar goes, key standouts come in the form of German trade, UK GDP, and the Canada Employment Report. That's all for now.